We have a question here. Oh, I'll ask by on long explanation, Alwana.
Oh, okay. Actually, it's a very good explanation, and I'll give the explanation, and then I'll give the trade from it. An inside day is when let's take today and yesterday for example. It means all of today's price action from the high to the low is inside the previous day's price action from the high to the low. So if I go back, let's go back to I'll pull up LVS as an example.
Right. Or Yoku. Remember we had those nice two inside days in Yoku?
Yep. So here's Thursday's price action, and here's Friday's price action. So Friday's price action is completely inside of Thursday, so that makes today an inside day. So you'll notice on the daily blog post where I put out the game plan, I think there's probably about a dozen of those stocks. So the way that the trade sets up for that is essentially that it means a expansion in volatility leads to a contraction in volatility. So especially in a case like this, when the previous, let's just say anywhere from 3 to 5 days, are momentum move to the upside or to the downside, if and when you get a consolidation, which is what an inside candle is, that stock is basically taking a break, and then you're looking for a trend day again coming out of the inside day. So when an inside day or even an inside week or an inside month, whichever chart you're looking at, but we're specifically talking about the daily here, you're expecting a breakout from the pause in price action to give you a good trend day. So when we're calling them out, we're actually looking for a trend day out of the consolidation. Now, depending on the previous price action, you can possibly forecast whether or not you expect it to break out to the upside or the downside. If you remember back, we were talking about SanDisk for multiple days. It just kept consolidating. Now, this is really more of a longer-term consolidation. But when you do get, there was one stock, it might have been AXP, I want to say about a month ago, where this day here actually, we were all over this one where it broke down to support. We had an inside candle and then another inside candle, and then the next day it gave us a really, really clean trend day. So that's essentially the type of setup. And again, the same thing over here in AXP again. So the inside days are setting up potential trend days. That's the best way to explain it. And it's a pause in price action.
And the actually, more inside days you get in a row, the stronger it is.
Exactly. And I think DD was an example of that. It just didn't roll over like we had expected it to after it actually bounced back up. I forgot the point I was just going to make. You can, Elmena, you can also use them as entry patterns, because right now we're actually talking about it. Let's say for example, what was the stock that trended on Friday? Let's say UA, just for argument's sake. If we pull up the first, we'll go to the 15-minute chart. So let's just say for argument's sake, you want to be long a stock for whatever reason. Then you can go to the 15-minute chart or the 5-minute chart and look for inside candles to be a breakout entry. So it's also very popular as an entry signal as well. So longer term on the daily chart or a weekly chart or monthly chart, you're setting up a consolidation, looking for an expansion in volatility. On the 15-minute chart, for example, right here, so you want to be long stocks above the opening price the whole day. Now you're just sitting back saying, all right, I'm not doing anything until I see an inside 15-minute candle. That tells me it's giving me very, very defined risk, which is that candle itself. And in this case, you want to be long, you trade a breakout of the 15-minute candle, which this was a pretty clean entry here. And you can do the same thing on a 5-minute if you want to fine-tune and lower your risk even more by looking for a 5-minute inside candle. Like here, you got a couple of them in a row, that's probably the same one as the 15. So it's multiple ways of using it. It's a, Marion and I are very, very simpatico on keeping things as simple as possible. And that insight, I call it out every day for a reason. They work and they're not that complicated. And if you really think about the reason why they work, it's exciting because it just makes sense. It's price actions taking a pause, and the more it contracts, the longer it contracts, like we had in that SanDisk trade. I think there was a $5 move in 2 days here when it finally broke out, even though it came back in. $5 right into resistance. So just stalking them sets up some good trades. And again, whether you use a spreadsheet on your computer, whether you use a notebook, I personally think using a Google document that's a spreadsheet makes the most sense, because you can literally track it from day to day and the biggest thing is you could log in on any computer and just pull up a spreadsheet. Put the week of June 8th. And just have a different column for inside days, bull flags, bear flag, stuff that's not setting up yet. And you'll find that that should be the first thing that you go to before you even look to do a scan on new ideas, because you're like, all right, which stocks are in my longer term day-to-day list that haven't triggered yet? I need to make sure I'm keeping an eye on those if they're at any kind of levels, or, oh, look, 5 inside days in a row. Got to keep this one on my list. And then you go to your new scans, because you can't let those ones go that that have been on your list for a while, and they eventually pay if you're diligent. Like Baba right now is a good example. It hasn't triggered in a few days, but it's on my list of like